Hello, good evening, and a very warm welcome to the Hot Seat. In the Hot Seat today is a person who has served in the previous government in a number of different capacities, but it's all to do with something that drives the economy, the Securities Exchange Commission of Sri Lanka. And the former Director General of that institution, Mr. Malik Kader, is here with us this evening. Very good evening to you, Mr. Kader.
Good evening, Faraz.
And thank you very much for taking the time and popping by here. Let me get straight to the point. It's 3 years since this government of Yahapalade came in here, and it is 3 years that I've noticed that the stock exchange is rather staid and static. But I understand that that is nothing directly to do with the SEC. But my question is about this. In the previous government, there was all sorts of things happening. The stock market was taking off like it was nobody's business. There were rules put in place to stem the unexplained rapid rises in various stocks. There were claims of pumping and dumping, and there was claims of market manipulation, and finally we were told that there were 13 files. But in between all this, we had a person closely, shall we say, loosely or closely associated with these claims, was brought in to head that same institution that was probably looking into him too. Now then, in between all this, we, the people, had a legitimate expectation of some action, that things would be put right, that the stock exchange was a place where there was all sorts of corruption happening and frauds and so on, and the people expected that this new government would come in and fix it. 3 years later, we've not heard a sausage about the 13 files apart from some initial sort of statements. What's happening? The market still stayed. We've not heard about the 13 files. The pumping and dumping has suddenly been dumped, out of sight, out of mind. So what's happening?
For us, when we left, I think in November 2011, the market was 6,200. And 7 years or 6 years later, the market is still about 6,500.
And
so
why
is
that?
The market has not grown at all. Well, for 6 years, I think 300 points is hardly any, because previously the Colombo Stock Exchange grew at an average of 25%. About the files you're referring to,
yes,
I would know whether it's 13, 14 or whatever the number is. There were very good cases that were available that we left behind. Unfortunately, up to now, we have not seen any one of those cases being brought to court, or, well, if not, at least being called for and compounded. So, I think during that period, there were tons of issues, as you quite rightly said.
Yes, there was loads of
pumping and dumping. There was no proper valuation on some of the counters. So that was because there was a market manipulation, and
there were runaway prices without any shred of sort of rationality.
Absolutely, absolutely. And that is why I think at that time we stepped in, although people are not very complimentary of some of the things we did at that time with Mrs. Sukata Dasa, who was the chairperson, and the commission. But from a very long-term perspective, people now think that that's what should have been done, and we did that.
So let me get this right. We had a situation where amongst all those claims, somehow or other, they managed to find a way of easing you out.
Yes.
Sorry, and they ease you out to some dark and dusty, well air-conditioned, well maintained office somewhere.
Not maintained.
Not maintained. Did you actually go there at the Ministry of Finance? I know you were senior advisor to
Yes, I was
Finance.
senior advisor, Ministry of Finance. That was the point. I was basically offered that particular thing. In fact, Faraz, quite very interestingly, I in fact offered to resign.
Right.
I said, give me 30 days, 31st of December, I'll pack my bags and go. And then I was told, look here, we can't let you resign.
Right.
Right? We will take you to the Ministry of Finance.
Right.
We'll give you a special position as senior advisor with all the perks
Right.
that you were getting at the CC. For us, I didn't want to take the government on or anyone because I'm just an individual. I was there to do a job of work, right? And I was doing my job. And then when this came, I said, okay, fine. And I took that appointment. And, well, I was doing a little work here and there, but not really work. And after about 3 or 4 months, the dust settled down. And I asked my boss at that time, well, there are better opportunities for me rather than being here. And would you permit me to resign? And then no one knew that I resigned. But I resigned in about 4 months' time.
And Mrs. Sugadadasa, she resigned.
Yes,
from the SEC.
After about 2 weeks of my departure from the SEC, right, she left on a matter of principle.
Now, Mrs. Sugadadasa, much respected and so on, and people believed that she was being coerced or forced to do something against her conscience, and that led to her refusing to carry on in her job. And, you know, much admiration to such people, because we have a shortage of such people in our country, in our public service at least, anyway. And certainly we have none of them in the world of politics, or if we do, very, very few.
Farah, just to add to that, you're quite right. I mean, we're very rare to find people of that caliber today in Sri Lanka. In fact, when we were there were enormous amount of pressures that we had, right, about certain, matters at the CC. And I must say that the chairman at that time, Mrs. Sugatadasa, was one who basically stood her ground and said, nothing doing. We have an act. We have to implement that act. It can be big or small, how powerful it is.
Big or small, we fry them all.
Yeah, and then I think that must be the reason that I got promoted, and she also decided to take a break.
Well, good for her. But we need to find out what exactly has happened to the SEC. The SEC, nobody ever hears about it now. They seem to be lacking the meat, but they do have a new act.
It's not a new act.
It's still a bill.
It's a bill. It has gone before Parliament, and I think it has been referred back again for certain corrections or amendments to be done, and that is where it stands.
And that is where we stand at the moment. Time for a break. Don't go away. After all, this is The Hot Seat. Hello and welcome back to The Hot Seat, where we are in conversation with Mr. Malik Kader, the former Director General of the Securities Exchange Commission of Sri Lanka. Mr. Kader, let me put it to you. How shall I put it to you? Nothing like being upfront and open and direct. So, just because one has a CDS account, does that mean one is qualified to head the SEC, to run it?
Well, that's a tricky question for us. But having said that, I must tell you, capital markets is a very complicated thing.
Right.
Now, just because I'm a lawyer or just because someone is an accountant, that doesn't mean that person basically is, has everything that goes with capital markets. There are special capital market qualifications today in Sri Lanka and overseas. So,
does it help if the head of the SEC has these qualifications?
Well, certainly it will help, because understanding capital markets is very, as I told you, it's complicated and it's difficult. So in about a month or two, it's difficult because to understand this. So you need to have some kind of an experience. Now, we had about 20 years. I was at the SEC for almost 20 years. So that made us basically grow up.
Career SEC.
Yes. 20 years at the SEC.
Right. But now we're told that there is a new SEC bill that's coming along. Is that needed?
For us, the SEC Act, which we have at the moment, is almost 30 or 40 years old. Maybe 1987 was when the SEC Act came. And then from 1987 up to now, right, there are tons of things that have changed in the capital market as well.
Right.
So you need to have, right, an act, right? But where this act is concerned for us, I feel that this act has addressed a lot of issues in the capital market, right? Capital markets have become very complex, right? Complicated, right? And they have also been modernized. So this particular act, right, from a very academic point of view, has addressed all these issues.
Right.
My question is the time right for us?
But my question to you is the Sri Lankan market big enough for all these sort of wonderful ideals, which may be better off in a bigger economy?
Yeah, you're quite right in saying that. Having looked at this particular bill for us, I see that this bill has a fair amount of portions that have been borrowed from very developed jurisdictions.
Right.
Right, like Malaysia. This act has been done in line with the Malaysian Act. You get little clauses, like objective clauses for each particular section. Those are good things, but you have to be mindful when you are borrowing things from other countries, right? The structure in Malaysia is that you have an executive chairman, so he runs the place. Whereas here, we don't have an executive chairman, we have an executive director general, right? So the structures are different. And also for us, just one little thing.
Yeah.
As I told you, you take a big umbrella, right? What covers beneath that are the people whom you're going to protect, right? So this is I'm talking about Malaysia, or maybe even Singapore, or even Thailand, right? That has a market capitalization of about, those markets are sophisticated, about 300 to 500 billion, about maybe 100 times the Sri Lankan market, right? You take this umbrella and you try to put it in a Sri Lankan context, which is 100 times lesser in size. Obviously, you're going to have the market over-regulated.
Right.
The market can get over-regulated. So you have to be mindful, right? The SEC has to have a very balanced approach in implementing some of these provisions that are there in the Act.
But my question to you is the Sri Lankan economy and the Sri Lankan capital market, is it big enough? Is it robust enough? Is it widespread enough to demand for all these controls and regulations and so on? Shouldn't it be as easy as possible to attract those foreign funds, to let them come in here, invest through our capital markets, and look at what Sri Lanka has to offer them in terms of returns? You're very correct in saying that for us, unfortunately, our market is a very tiny market, right? Even if you are to attract a big foreign fund to come into Sri Lanka, he would not have any counters basically to go and place his orders. Because our market is not liquid enough, right? And then the companies are small. For a big foreign investor, our market is tiny. So you need to get mid-level investors to come and invest in the market. So I think it's the job of the government, right? It has to be a top-down approach, right? To see that this market is grown, right? We are just 3 trillion market. That's hardly any. You compare it with India, it's about 300 times. You compare it with all the other markets, the big giants, they are huge. Right. So we are in our infancy, but we have to start somewhere. So they've started. But to be fair, what should the real role of the SEC be? I mean, we've followed instances where the SEC have issued sort of notices on some brokers, reminding them that this matter is subject to, let's call it litigation, and that they shouldn't be releasing any funds. I'm talking about one particular transaction, don't want to name, but we have all the facts with us, and they don't do that. They sort of ignore the SEC, and the monies are released, and all the broker has to tell the SEC is, well, you know, your letter arrived at X time and we did it several hours before X. Point there, but there is a feeling, there is a perception in the market that this SEC is just a shadow doing absolutely nothing of any substance. Is that an unfair comment? Is it a fair comment?
I wouldn't want to say whether it's a fair or unfair comment, but where the regulator is concerned, right, they have to be spot on. Where if there are irregularities where the market is concerned, you cannot say, as quite rightly you say, you cannot let the broker say that, okay, the letter came at this time. Before the letter came, you could always call them and told them, look, we are sending a letter, right? Don't wait for us, right? They could have done it immediately, right? That's the kind of regulation that is necessary. And then you also don't need to frighten the investors, right? No, the market participants.
So what
you have to be
a
friendly. No, not a strict. For us, there is. I've been always saying in the last program I mentioned, markets have to be mothered and fathered, right? We are still, I think, in the mothering stage. It does not mean that you should let everything go, right? We are still not ready to take the cane. We need traders in this market. Unfortunately, we don't see, you see quite, the traders are basically out of the market. So we need to have a trading pattern as well. That doesn't mean that we need to let the traders pump and dump in the market. You need to have a watchful eye. You need to have proper surveillance and see that those things are done.
On that note, time for another break. Don't go away. After all, this is the Hot Seat. And welcome back to the Hot Seat. We are in conversation with Mr. Malik Kader, the former Director General of the Securities Exchange Commission of Sri Lanka. There's about 5 minutes left, and I thought we'd ask you of a word that I don't think the public is very familiar with, but let's bring them up to speed, shall we? Demutualization. What on earth is demutualization?
Right. The Colombo Stock Exchange is a mutual exchange. Right. That is, it has members. It's a member-driven exchange.
Right.
Okay. So the world over, I think IOSCO also has put out some papers that for better efficiency of market, for better regulating markets, you need to what is called demutualize the stock exchange.
Sell it off.
Not sell it off. It's not selling off. Now, it's a member-driven organization, and you look at the articles of the Colombo Stock Exchange. It is a not-for-profit organization, and they are not incentivized or driven for growth. So that is why world over they come up with this concept to demutualize the stock exchanges around the world, and most of the exchanges have done that, and they've been very successful. Now the question is for us, the demutualized exchange, right? The articles of the Association of the Stock Exchange says that if this exchange is to basically liquidate, right, or broken up or whatever it is, the funds of the exchange or the assets of the exchange will have to go to a similar organization.
Right.
Now that's a waste, right? Because there is government also has invested in it. So what happens is you need an act of parliament, right, to distribute.
Yeah. I see. They can't just be doing that.
No, they can't do that. So that's why you need an act of parliament to distribute the assets. So I think in this particular demutualization bill, it states that 60% should be given to the members.
Right.
And 40% will go to
the government.
The government in the sense called a capital market development fund. Now this 60%, I don't know the basis which this 60% has gone, but looking at a very successful demutualization regime of Malaysia, it was other way around.
Right.
The brokers got 30%, a group of remisers, like
Yeah.
investors, advisors got 10%,
Yeah.
and the government Capital Market Development Fund got 60%.
Right.
Well, fine, if a proper analysis has been done, a proper audit has been done
Yeah.
in apportioning the shares as to 60-40, right? I don't think there's an issue. But if they have not done that,
Yeah.
I think there's an issue. Because for us, you must remember, the 40% which is going to the Capital Market Fund is for the public,
Oh, is it?
right? Now, the government has given tax concessions. Right, capital gains tax has been given. There has been World Bank funding. There has been Asian Development Bank funding, right? USAID funding that has gone to the Colombo Stock Exchange. So those came because of the government. So the apportioning of this 40% to government should be properly looked at. The basis of apportioning this for us is that the 60% given to the brokers is from 1987 up to now. They looked at, I think Malaysia looked at it that way, the contribution the brokers have made towards the development of the stock exchange. So their contribution has been now apportioned at 60. And the contribution the government has made is 40. Right?
Why is the battle raging on then?
No, my question is, have we done a scientific audit, right, for this? There are investors in this country. They're the public of this country who has
They have a right to know.
They have a right to know. Who have also contributed very indirectly, and their portion or their portioning of the 40% has to be spot on.
Good. Do you think the government will negotiate? Do you think they'll be stuck on 60, or do you think they'll look for a bit more?
For us, even at one time where the brokers were concerned, there was a certain segment of brokers said, look here, we brought in bigger business than the other brokers.
Yes.
So we need to have a bigger share from this. And at one time, there are the bigger brokers got a larger share than the other brokers because it's a contribution they have made.
Right.
Right. One guy brings, don't you know, 100, maybe 100 or 200 investors, right, or money into this country, and another guy brings only 10. There has to be some kind of a...
There should be a mismatch.
Yes, there is a mismatch, yeah.
Manik Khader, it's been an entertaining half an hour. Thank you very much. We've got so much more to discuss, and I think it would be appropriate to ask you to join us on a segment of Newsline, which is broadcast on TV1 at 7 a.m. every weekday, Monday through to Friday, 7 to 7:30, talking current affairs. And on that note, with special thanks to Manik Khader, we say good night and God bless.